Ambassador Stu Eizenstat is former Deputy Treasury Secretary and former Ambassador to the EU. David Sampson is former Deputy Commerce Secretary. John Lonski, Chief Economist at Moody's, and Jim Frischling, President at Newoak Capital. Welcome to all of you, gentlemen. Stu, to you first. That was a little bit of a tragedy because everybody thought this is great. Let's let corporations bring back all of this money. They did. And then right after, they slashed over the couple of years past this tax holiday, 600,000 jobs. A whole bunch of pharmas did this. Pfizer slashed 58,000 jobs. Merck laid off 44,000. You see it on your screen. Lilly, Bristol Myers Squibb, J&J. The workers did lose here because the money did not go to them or to hiring. It went where? It went to all kinds of things that helped investors in the stock market. But how can we make sure that a tax holiday will work, Stu?
Well, first, let's say that the president-elect made two terrific appointments. I think Steve Mnuchin and Wilbur Ross are highly qualified. I was Deputy Secretary of Treasury, but Undersecretary of Commerce. And I think the tax holiday is important to get money back, and it can help pay for infrastructure, but it's only one component. We're dealing with technology and globalization, which are putting tremendous pressure on jobs. I've been on major corporate boards, UPS and others, and there's tremendous pressure on cutting costs, and that means oftentimes cutting jobs. So a tax holiday is only one part of it. You have to have a comprehensive economic program, which the president-elect is trying to put together, that makes the country more competitive, puts money in consumers' hands so they can buy more. And one component that is really critical is trade. And here I'm most concerned with backing away from the Trans-Pacific Partnership, because without exports, without getting into these markets where 95% of the world's consumers are, we can't assure that tax holidays are going to create jobs. We have to create them through exports as well.
The two are intertwined, aren't they, David? You were at Commerce. So there are a couple of things at work here. The trade deals, TPP and NAFTA, which even Wilbur Ross came out and said on Fox Business with Maria, some of the aspects of these were just dumb. Okay, fine, but we don't want to fall into a trap, do we, of becoming protectionistic, which is what happened, which is what happened during the Great Depression. Smoot-Hawley, which became a very protectionist plan, really kind of exacerbated what was already a pretty severe depression.
Yeah, you're exactly right, and no, I don't think we want to become protectionistic, and nor do I believe that's where this administration is going to go. We know that trade flows actually at the macro level increase national GDP. They've been very important for not only the U.S. but for our trading partners around the world. The problem is this. There are dislocations in trade deals, and there's dislocation that's amplified not only by trade but by technology. And at the micro level, there are some very significant dislocations in specific industries and regions of the country that dislocate workers. I think we have gotten to the point where we need to have a very serious discussion within this context of what's it going to take to rebuild a historic bipartisan consensus on trade that really looks at a meaningful trade adjustment assistance for workers and for regions and industries that's not just transfer payments, but actually help these regions and industries become more competitive. And I think that's what Mr. Ross is uniquely qualified to do.
Well, the promise of a $1 trillion infrastructure plan has gotten a lot of people in those downbeaten regions that you're speaking of, David, very excited. But yesterday, former House Majority Leader Tom DeLay was on this program exclusively, and here's what he said about that being rubber-stamped through a Republican Congress. Maybe not.
There's no way there's going to be a $1 trillion infrastructure program, not with this conservative House. No way. They're not going to spend that kind of money. If they wanted to spend that kind of money on infrastructure, they would have voted for President Obama's stimulus package.
Knowing, John Lonski, that a stimulus package did go in, how did that boost the economy? Look backwards in your rearview mirror and let our viewers know if that worked.
it didn't work the way it was supposed to, okay? What the stimulus package during the early part of Obama's presidency did is simply help bring a recession to end. It did more to buttress the economy as opposed to serving as a launching pad for faster economic growth in a recurring manner. You know, we've had the Japanese resort to infrastructure spending time and again, and yet Japan's economy struggles to grow by 1% annually. Don't look for any miracles from infrastructure spending.
Okay, well, that is exactly what Tom DeLay said. We wanted to show you this live picture here. This is Senator Dan Coates of Indiana, and at the moment he's talking about Carrier, the air conditioning company that has now announced it will stay versus move jobs to Mexico. There's got to be some type of deal that we'll hear more about tomorrow when Donald Trump has a rally in Indiana to articulate what's really going on there. But Jim Frischling, help our viewers invest around all of what we've just talked about, because there's some changes here, and there are publicly traded companies that may be keeping jobs here, but at the expense of sort of higher costs and higher margins.
Sure. I mean, there were a lot of good points made, and I have to tell you, I don't want to fight the trend that we're seeing, which is favorable. It is a good push for stocks. The concept of less regulation, not no regulation, but less regulation. The Wall Street folks, the former Goldman boys that are getting involved. You're already seeing banks up about 10%, but I think you're seeing a lot of focus on the biggest banks, the Goldmans, the Morgans, the core four, JP, Citi, Wells, and JP. Don't forget the regionals. Don't forget the Fifth Third, the regions itself. These are banks, in my opinion, that were particularly hurt by the regulatory environment. They didn't have the diverse and global revenues of the monsters, and I think they would benefit from a pullback of some of the issues of Dodd-Frank. And I think it's that sector that I think the financial sector, yes, but look at some of the regionals, U.S. Bancorp included. So I think those have more room to run.
I think you're right. I'm glad you mentioned that. Stu, before we go, we just got a few more seconds here. You tell me, what's the first thing you'd love to see Steve Mnuchin do as Treasury Secretary?
Well, I think the first thing is to shape a pro-growth tax bill that does lower rates but closes loopholes so we don't blow a hole in the budget. Estimates by bipartisan groups, Tax Policy Center, for example, are talking about a $3 to $4 trillion loss. So I think it's very important that Steve, with his Goldman background, fashion a pro-growth package, but one that doesn't blow a hole in the budget, and that he find a way to make TPP work in convincing the president, the new president, that we have to export to these markets. That's 40% of global trade in those countries of TPP. So I think it's that, and he also has a very big problem on sanctions. He's got a huge agenda, so he's got to deal with Iran sanctions, Russia sanctions, Cuba sanctions. All of these are going to be on his plate, but I think the first order of business is a pro-growth tax cut that doesn't blow a hole in the budget.
Stu, it's lovely to have you, Stu Eizenstat. Jim Frischling, as always. David Sampson, thanks for coming on the program, and John Lonski, our good buddy. Thank you. Over